How big is this problem, Pramod, first of all?
Well, in terms of slowing demand and loan offtake, if you look at the corporate sector, there's a lot of excess capacity. Right now, loans are largely happening to the retail sector, mortgages, autos, some amount of personal unsecured loans. So that's really what's driving loan growth at the moment. Corporate demand is likely to be subdued for an extensive period of time till we see meaningful pickup in the economy.
As mentioned in the introduction, we've got these growth numbers out later. We're expecting a bit of a bounce back certainly taking place there in India. Is that being reflected with activity that you're seeing in any way, shape or form?
So certainly we'd expect a bounce back to come through in the second half of the fiscal year, which is this quarter and next. There was a huge trough, and last GDP numbers were minus 23% year on year. So that's quite significant. The economic indicators over the last couple of months have been quite good. So given the nature of the trough, there would be some degree of pent-up demand. There's a little bit of the festival season as well, so you get a little bit more of spending happening. The important thing is to see what's the sustainability of this. Given the huge trough that's happening this financial year, and it's difficult to say how, what the end of the year number looks like, maybe it's minus 8% or so, you're going to get a good bounce back next year. But the question is that what happens in the year thereafter? And the foundation for that has to be set now so that you have the systems in place for growth to come in the year ending March 2023.
And certainly what we've been seeing is, you had this first wave of bad loans. Are we likely to see a second wave of them? As it is, the country has the worst bad loan problem, I think, in the world.
Yes, I think that the starting position wasn't great. There was a lot of corruption in the Indian public sector banks, a few of the Indian private sector banks as well. And once you add on to that, supervision, which wasn't at its best, as well as promoters of corporates who just had felt that they had a lot of impunity, they could do whatever they wanted, and a bankruptcy regime that wasn't quite fleshed out. That was the perfect combination, really, for non-performing loans to peak. So the Indian banking sector has been saddled with this situation for a number of years. Slowly, the non-performing loans ratio was declining, and now you have COVID-19 hitting. So overall, are we going to see a jump in non-performing loans again? The answer is absolutely. The Reserve Bank of India has expected NPLs to go up maybe 1.5 to 1.7 times, depending upon the severity of the downturn. And so we can see this coming in. The question is that when does it hit? So a lot of measures have been put into place to ensure that the hit is minimized and that you see the effects slowly coming through over time. So there are loan moratoriums which are being lifted, but loans are being allowed to restructure. And so we anticipate that we'll get a better position in terms of peak NPLs, maybe not during the calendar year 2021, but sometime during the calendar year 2022, which is when a lot of these schemes start rolling off.
Pramod, what then can the RBI do to help? Because they've already done so much heavy lifting this year, and then you've still got inflation stubbornly high. When you're talking about this second wave of NPLs, what further action do you expect from the central bank?
Frankly, the RBI is doing whatever it can. It has looked at very sensible moratoriums. It has, with the help of the central government, ensured funding for SMEs, which is the critical sector, which would cause non-performing loans going forward. It has, allowed banks to step back a little bit from capital and liquidity requirements. It's managing the yield curve as best as possible. It's difficult to see what further the central bank can do. The bigger trouble lies right now with the central government and the budget deficit being quite out of control. And it's more a question of what can the government do to manage that, to get some kind of glide path towards midterm fiscal consolidation. because it isn't just the central government that's in trouble. The GST rules require that central government to raise funds and then provide it to the state governments. The state governments don't have enough money to spend. So that's going to create an impact as far as the economy is concerned. And that, again, is then going to create an impact as far as demand and corporate sector growth is concerned, and therefore into the loans. So it's all quite circular. And a lot of this rests, as you said, has done the heavy lifting. A lot of it now rests with the central government and that glide path. So they're trying to do some amount of privatizations, but structural changes to the economy is what's really called for. Some announcements have come through, but a lot more remains to be done.
And we are looking at these, hopes of a pretty sharp rebound coming through in the economy. At the same time, we're seeing credit downgrades in India abating somewhat on these hopes. Does that kind of give a little bit of help to borrowers to refinance debt here?
I think a lot of refinance is happening, and refinance is happening at lower rates. The huge spike that we are seeing as far as jumps, the large banks have largely increased loans in the mortgage sector. And these mortgages are actually refinancing coming from non-bank financial institutions. So the overall, it's not that the mortgage pool is jumping hugely, but it's just getting transferred from non-bank financial institutions that don't have the large pool of deposits available for them. And so the large banks are taking advantage of the situation to increase mortgage loans. So there's refinancing happening in the household sector. There's certainly refinancing happening in the corporate sector, and everybody is incentivized to ensure that there's good liquidity flowing through, and there's as much of maturity extension happening as possible.
And what other factors do you see driving the economic rebound? We know that there has been a better monsoon, which is going to help out the farming sector, for example. But in the banking sector, is it domestic demand? What else helps here?
So you're right. I mean, the farming sector is something that's really important. But the good news as far as India is concerned is that as a result of the opening up of the economy, no more COVID-related shutdowns, the wheels of the economy has started moving, and that's really critical for cash flow and just to move right through the economy, particularly for the SME sector. So hopefully this momentum builds on itself. Agriculture is great. The monsoons were good. The last crop was good. The following crop, which is the winter crop, is expected to be pretty good as well. But now you need more comfort regarding what the future is going to look, and therefore consumer spending that's going to lift things. The catch here is that government finances are in trouble, and so their ability to spend on large schemes and infrastructure build, for example, that's limited. In any case, infrastructure has a large lead time. So those gains may not come through quite quickly. So the hope will largely lie with the consumer getting confidence to boost spending. And the banks are certainly trying their best by increasing the amount of personal unsecured loans that they're making to consumers as well.